Hello, here we go. Thank you for everyone joining for this panel. It's a pleasure to be here in a beautiful city, Macau. A quick introduction of myself, and then I'll pass on this to the panelists since we're running a little bit behind here. So my name is Enna Weng. I am the head of investment banker and also the managing director of Freedom Capital Markets. Also managing our family office. It's a 4 billion family office, single family out in Kazakhstan. So I'm actually based in New York. Little background on myself, joined Freedom Families about 2 years ago. Prior to joining, spent 20 years in Wall Street. Started as a fixed income analyst at Morgan Stanley and make my way through pretty much a lot of firms out there on Wall Street. Macquarie, Wells Fargo, and spent about 4 years managing the U.S. equity for Barclays. Has been a very interesting journey on managing the family funds here, but had the opportunity here to be part of the team. So would love to start and kick this off. And Ali, so why don't you talk about your journey? Because we know you spent some time in Wall Street and then also now in Hong Kong. Maybe you can give a quick overview of your backgrounds and how you are making your way into Hong Kong, your journeys, and how do you found it, Blue Pool, and what's your thought process when you put that together?
Great. Can you guys hear me okay? All right. First of all, we started late because of me, so I apologize. I just flew from Shanghai. So thanks for your patience. And thanks for having us today. And I see some friends. See my childhood friend Brian over there. Hi, Brian. Anyways, great to meet you guys. I'm Oliver Weisberg. I go by Ollie. That's my nickname. I'm originally from Palo Alto, California. Had an academic interest in China. Pretty much since 1992, I've lived the vast majority of my adult life in Greater China. I came out originally with an interest in academia. I was studying China and Russian comparative privatization a long time ago. I kind of got then moved into the investment business. My career, having grown up in Palo Alto, my father's an academic at Stanford. I was always very interested in sort of international relations and so forth, and that was why I originally came out. And like a lot of my friends at the time we were interested in finance, and I came out. And my career, has been a lot about serendipity. I went into private equity early in my career. I was on the original team that led the Series A investment into Alibaba. So I was one of the early outside directors of the company. And then I was late today because after doing private equity, I spent about 10 years at Citadel, the hedge fund, and my old boss was in Shanghai last night, so I went to go see him. So you always want to stay friends with your old bosses, and Ken Griffin was an incredible mentor to me, so that's why I was late, so please forgive me. Anyway, so after my time at Citadel, because I had a prior relationship with the Alibaba founders, we thought about setting up a family office. Blue Pool Capital originally was just our own internal capital, but then over the last period of time, we've actually taken on some additional families, so we're more of a multi-family office, and we focus on a variety of things. I'll give a quick snippet, and then we can talk more a bit later, but we're quite active in the hedge fund business, the real estate business, the private equity business, and we're also active in the sports business. So we can come back to that a little bit later.
All right, Dennis, your turn.
Sure. A little bit background. I have been working for Lawrence since 18 years. So my life actually is very simple. So I was, working in Malco since 2006. And at that time, I was the group finance director and CFO already. So I have been working for him. And then he gave me a lot of different titles, like, to look after like human resources, administration. I have no idea actually. So, and then after a while in 2018, Lawrence decided to set up a family office. So, and then actually asked me to handle all his wealth, so that to invest and also to look after everything, right? So, and then I take on the challenge. I become the president and CEO of Spade. So this is a little bit background. And the funny thing is, like Spade,
I was gonna ask you because We got Blue Pool, and then we got Black Spade. If you can tell us a little bit story of how you found out the name.
Yeah, that's very interesting. Actually, I have to say thank you to Ollie. He doesn't know, you don't know what's going on is, when we, formed the family office, we have no idea which name to use, seriously. And then we have to find something, very like representing Lawrence himself and also the flagship business. So we decided to go for a Spade. Spade is more like, related to Malco and Lawrence, style, right? And then we look into just the Spade is not enough because like the Spade is just one word, right? And actually, we use Blue Pool as a reference. Seriously, I'm serious.
You don't pay him IP rights.
I'll buy you dinner. So we do that, and then Blue Pool is cool name. Using a sort of like color in front of the nuns. That's very cool. So and then we keep on thinking which color. And then we decide to use black because like there's a lot of big like PE fund, asset manager like BlackRock, Blackstone, right? And also one thing is we keeping in mind is like something black is nice, like blackjack, right? So we use black as the color. So we at the end of the day we choose Black Spade as our family office name.
Amazing, good story. I'm Mario.
There we go.
All right, well, welcome to Macau from far Brazil.
Yeah, 25 hours fine.
There you go. You made it, and then I hope the jet lag's not too bad.
A little bit.
Yeah. So why don't you talk a little bit about your family? Because your family in Brazil pretty much built a legacy in the home building materials, and obviously it's expanding to many different sectors coverage. And how does that impact you when you build out Upload venture?
Well, let me give a little bit of my background before. So I used to be actually a professional race car driver. I used to race for Honda in cars, so I used to live in US for a couple of while. And back in 2010, I had a major accident in Japan. Put me in a wheelchair. I spent 4 months and a half in a wheelchair. My family told me to go back to Brazil, where we have a family business. Our family business, we started back in 1918, so 106 years ago. As you guys can see, he's not there, but I'm the fifth generation of the family business, taking care of the business. Today is a global portfolio. We started with textile back in the days. We don't have textile anymore. In 33, we got into cement, chemicals. 55, we got into aluminum actually. And my grandfather was taking care of the aluminum plants, and he was a kind of a visionary. As you guys know, to produce aluminum demand a lot of energy. So they start building their own hydroelectric plants in Brazil. That became a business today. It's a listed company. I think it's around $4.5 billion in Brazil market, stock market. And we can go over the portfolio, but it's more than 12 different sectors. And in the end, I'm just taking care for the next generation. When I came back to Brazil in 2012, I started investing our family resources into tech companies. And one of my mentors back in 2019 teased me to leave my family business to open my investment firm. He was my anchor investor for the first vintage. We did it pretty well, 6.7 times DPI in 7 months. We got all the wave of the market in 2021, 2022. And that's it in a nutshell.
All right, so why don't we do a little bit deeper dive on your investment thesis? And let's start with Ali. You're a fund. You guys have a lot of interesting different type of asset class coverage as well. But most recently, or one of the theme is sports. So if you can talk a little bit about that.
Yeah, sure. I hope we have some sports fans in the room. It's great to meet you. We got to talk car racing later. Yeah. We're not in that yet. But I'm a big F1 fan. When we set up the original family office almost a decade ago, we focused on the traditional asset classes, hedge funds, private equity, real estate, those kinds of things. And at the time, my business partner, Joe Tsai, we talked about doing something in sports. And I was a walk-on to the squash team in college. I was like a kind of a bad squash player. And so I followed sports, but not as avidly as Joe. But we looked at the economics of the sports industry, and we just found it amazingly interesting. You have scarcity value, you have media rights, and so forth. So fast forward to 2017, we bought the Brooklyn Nets. which has been an incredible investment for us. And one thing folks may not know in the audience is over the last couple of years, the leagues are liberalizing. So now funds can actually buy teams and participate. Originally, they were more like co-op style, like in New York. So when we bought the team, it was originally a personal investment for us. Over the last couple of years with the liberalization, we've actually now, through our financial vehicle, through our fund, we've anchored the Avenue Capital Sports Fund, which is a third-party fund. We're the anchor investor. We're taking outside capital that will go ahead and compete against the folks like Arctos, Redbird, Sixth Street, these other names. So sports has now actually become an investable asset class, which was not the case 3 or 4 years ago. So it's something that's really interesting for us. For our overall framework, the way that we think about things is, although we have outside capital now in our firm from many other families, it was really just originally our own money. We think like a family office. So we're very focused on capital loss. And so our investors are like-minded like us. And so we build our portfolio with the baseline of a strong group of market-neutral, low-vol hedge funds, really to give us a good ballast, if you will, then some real estate, and then like you, we're also in tech investing, where obviously the risks are higher, but the rewards are. So that's how we build the portfolio. And the thing that we've added to the main vehicle is sports recently. And that's across the larger NHLs, NFLs, and so forth. I mean, we're obviously waiting for the NFL to see if that gets approved for private equity funds, but we're also very focused on women's sports. We own the New York Liberty, the WNBA team, and if you've seen the growth in the last couple of years, it's also very investable now. So we're very excited about women's sports.
Amazing. And Dennis? Very interesting to learn about your story, because you guys have doing a lot of cross-border transactions covering all the sectors that we talked about earlier at lunch. One of the most notable one was one of the largest de-SPAC IPO, most recently a cross-border de-SPAC IPO with the $23 billion, which is VinFast. Can you talk a little bit about that transactions and also maybe touch upon your view in the Spade market? Because some funds, most of the funds are shying away from that.
Okay, so to the question, right? VinFast and SPAC. VinFast, yes. This is a long story, but I make it short. That is actually is very interesting, the SPAC. So we know the Weng Group for 8 years ago. The company itself is, I'm not sure whether you know their background. The Weng Group actually is the largest conglomerate in Vietnam, and the person, owned this is the richest man in Vietnam too. So we actually have some relationship with them 8 years ago. They come to Macau and present us a very interesting project. So we work on the project, but at the end we didn't do anything seriously. But we built up, although we didn't do anything, but we built up a very good relationship with them, so that we always keep on testing each other, email each other. So we have a trust, right? So I know that the company basically want to go for IPO. The Weng Group downstairs, they have a big giant company is doing the EV, the electric vehicle called VinFast. They try to go into the U.S. market and raise some fund at the time. But after that, I heard that they decide not to go for it. So and then I talked to them. I see whether you guys want to do the SPAC, right? We have a SPAC there, and then maybe we can do something together. Since we know each other quite well, and they say why not? So we quickly went to Vietnam and take a look at their site. Wow, they have a very massive site, very big, and then it's all robots, just like Tesla, just like see a lot of arms, working, days and night. And then I test drove the car, right? I drove Tesla before too, and then I tried the car. It's actually amazing, To me, it's very similar, and also the seat is more comfy, basically. It's not that hard. So and then we sort of do a very quick due diligence on that, and then we quickly talk to them and appoint the professional, and then have the do the DD, whatever, lawyers, work on the agreement, negotiation, everything. So we actually, when we meet them at first time in April last year, till we complete the deal in August, it's only 4 months. So we just done this deal. This deal actually, if I heard that it's sort of like a top 3 de-SPAC ever in US in history. That's actually is very interesting. Yeah. But I'm just saying that since you're talking about the SPAC too, right? So what I see the SPAC is, I think SPAC is very interesting product. You let people to know, you raise the money first, and then you can invest into a target, right? But the product itself is safe for the investor. Basically is principal protected, one. Second thing is right now to this environment, we have interest. The people can earn interest too. So just like you're putting money into the bank right now, okay? And then the third thing, you have a free wallet. So I think the SPAC product is good. So whenever Ollie or Mario or even Enna, you guys want to do a SPAC, I like to invest too. I invest all the time, the SPAC, yeah. So if you don't like it, you can redeem it and get your money back and also interest. That's actually good. If you ask me, the SPAC market also is good too, is back to 2020, the SPAC IPO occupy almost like 50% of the entire US IPO, 50%. 2022, which is around 75%. That's crazy. 2023, last year, is around 50. I think this year will be sort of like in this like 40 to 50% mark. Yeah, I think it's mainstream now.
Amazing, thank you. Mario, so I know your Upload venture is very interesting. It looks at all stage of venture supports of the Latin entrepreneur. Can you maybe talk a little bit more about how you guys think about like constructing portfolio, what kind of entrepreneur that you guys are aiming to support in that market?
Sure, thank you for the question. Great question, actually. Well, Upload Ventures was founded by 4 partners that combined, we have around 45 years of venture in Latam. We already backed 9 unicorns out of 45 or 48, whatever we have over there right now. And our main focus is on the B2B side, sector agnostic, because Brazil and Latam, you don't have that many density on the sector-wise. Maybe in fintech, because of the open banking that we had back in 2013, 14. So that said, today in Upload, we have 2 strategies. One in the early stage side is a $120 million fund, very small, very concentrated. Likewise, in the early growth where I manage. Today, it's a $250 million fund where we're going to invest between 8 to 10 companies, checks between $15 to $25 million. My partner runs a Monte Carlo simulation that we're going to have like 3 main assets. So yeah, that's it.
Amazing. All right. So, well, we have three very different type of portfolio investment, constructing in different coverage, different sectors, different focus. So let's talk about risk. And then if each one of you can maybe high level and talk about like what kind of like measures that you have in terms of looking into investment and what kind of risk that you guys, or how you guys are managing your risks accordingly. Yeah, Ali?
Sure. When we were preparing kind of the panel today, the 3 of us sort of have some similarities, because we all manage some family money, but we also have some differences in the way that we run our businesses. I think when I was thinking, it was one of the original topics we were going to talk about today was sort of family office and so forth. And I think what I learned when we set up our family office, there's sort of no right and wrong way to do it. Is when you're managing your own money, or even when you're managing others people's money, as long as you're clear on the mandate. I think when we think about risk, we're very focused on long-term risk-adjusted returns. What I mean by that is oftentimes in the fund business, there's some sense I need to be investing all the time. I've raised capital, I should be investing. The way that we think about it is often the best thing to do is actually to not invest. And so having that discipline and making sure that you have a risk-on, risk-off culture is not as easy as you think, because there are some environments at some firms where there's a constant pressure to be putting capital out. So when we think about risk, the main thing is when should we be investing and when would she not? And I think that's easier said than done, especially when I'm relatively advanced in my career, but our younger people, So from our perspective, each time we're investing, we're thinking about where is our best marginal dollar. Is it public? Is it private? Is it tech? Is it real estate? So that's, clearly we have a lot of metrics at the office when we think about, there's a lot of numbers and metrics associated with that. But the main thing we think about is what's the best risk-adjusted return. One example I'll give is when I was, I think looks like many young people here, when I was your age, when I was starting in private equity, you'd write a memo. You'd say, these are the good things, these are the bad things, and fundamentally, and then at the back of the memo, there'd be something on geopolitics. You'd write, this is XY country. I was doing Indonesia, 25 years ago. Unfortunately, for the last couple of years, we're in an environment where the geopolitics are actually the first part of the memo. And so I think that's something that has been new to everyone in this generation now. And then this is just a change right now. And so country risk is something that, bluntly, when I was your age, I didn't really spend time thinking about. So I think that's just something that when I think about risk tolerance, that's something that's new, that we've had to adjust in our portfolio. So for the last couple of years, we've actually been very inactive because I can't understand what's happening in the world, so how can I be investing capital? So I mentioned sports because sports is the one thing we've actually been investing through the cycle, whereas in a lot of our other traditional businesses, we've been a little bit cautious, but we're hoping to redeploy soon.
All right, what about you, Dennis? What kind of risk measurement you guys are looking into? Assuming like all is staying on the sideline right now, and what about you guys?
Yeah, I mean, only talk about the entire macro. That's very, very good. If to me is we are more like a family office, right? What we do is if I want to invest into the company, the risk management that I would do is first of all I would see the management first, right? So if the management is good, nice, professional, trustworthy, have to be friendly because you don't want to deal with someone crazy and moron, right? Sometimes. So the management itself is important to me, and also if I invest the company, the shareholder structure is important. Like I don't want to see any dispute in among the shareholders because that always drive you in the area that create tons of conflicts. So that's for sure. And then the third thing will be the control, right? I mean, if I just invest small amounts of money, that's fine. We don't care. But if I invest, to certain size, have certain sort of like substantial shareholding of that venture, I got to have control, right? At least we got to have the information right. I have to know what's going on. And then I also need to have some control, like payment approval, whatever control, or even sitting on, the board, right? So that's the third thing. The last thing will be the exit. Normally, a lot of people asking us to invest into their company. They always say, oh, wow, look, this is like, it's going to be in 5 years, it's going to be IPO for X amount of dollars. And then we can be a target to be M&A, and also we can provide you a lot of dividend. Always like that. We hear tons of this. So to me, I trust this. But to me is I have to put a clause in the contract. Is the exit strategy. There's a lot of format that we can do, right? So make sure that even though they don't IPO, they don't being acquired, I still get something back. This is like the risk. I will have to manage this. Yeah.
So to piggyback to what Olive touched upon earlier, and they're not really deploying. And what about you guys? How do you guys looking into capital preservations? Are you stay on the sideline or are you deploying?
Absolutely. Right now, nowadays, we have not been investing for the last 18 to 24 months. Because, we talk about the equity and bond, okay? Because it's hard to find a window right now like this, If offer you're doing nothing, offer you 5 to 6% interest rate. That's crazy. That's very good. So
this is new for you guys. We have this for a long time in Brazil, very higher than that.
Exactly. You guys are used to that. 5's pretty low.
So speaking of interest rate, so we're based in Kazakhstan, and then we will issue 16% of rate return on bonds. And a lot of the converts would issue 16, 18%, and then people are like, this is really high. But then I was like, but inflation's 22, so puts things in
That's true.
perspective.
You know, outside of the venture capital that it's my day-to-day business, our family, we founded actually before I was born, in 87, our bank in Brazil, so they can manage our own single-family office inside of the bank. And basically our strategy today over there is like we have 80% outside of Brazil because we have already all our portfolios, like today 50%, 55% of the revenue of the group still comes from Brazil. So that said, 80% of our wealth is outside of Brazil in strong markets. And from that 80%, I would say we have a very way to invest in an endowment way. So we keep deploying every year, but we are looking forward for the next 25 to 30 years. So it's you want to be in the best managers where you don't want to be in like the $2 billion manager. We like to invest in small managers that really do like a different type of work. I would say more like built to suit.
Yeah, I mean, I'll just add one more thing. I think when you think about investing, whether it's a family office or a fund, it's always about where's your best marginal dollar. And as Mario said, it's also where you're from. Like, we're here, our core asset is Alibaba stock, so we want some diversification, U.S., Europe. On the other hand, you think about U.S., China right now. Yeah. Right now, because of the unfortunate political climate, for many, many reasons, the Americans are not deploying here. Obviously, we all hope that changes.
You know something, a fun fact, if you go back to history, in 97, Brazil and China, Brazil used to export like $1.5 billion only to China back in 97. If you go today, Brazil, overall, if you've seen history, we've been very neutral in geopolitical situations. What is good for us? You know, like sometimes we have a left side, right side government, but overall for foreign people, we're going to be really neutral. Today, well, not today, last year, we reached more than $100 billion of exports to China. So if you guys want to come down to Brazil, happy to host you there anytime.
Lovely. Well, we have 2 minutes, less than 3 minutes left. So maybe curveball, quickly, what would you not invest?
Look, I think, we run as I mentioned, although our firm has outside capital now, we still run it like it's our own money. And so there are certain industries that are reputationally damaging we will not be involved in. So I think, most things we'll invest in, but things that and I think reputation is, you kind of know it when you see it. There's that famous Potter Stewart quote, you know it when you see it. So it's hard sometimes to define, but there are certain businesses we will not want to be associated with from a brand perspective, and we avoid those. So.
Yeah. What about you guys?
Okay, right now, the equity and bond, we still, do not too sort of like interested in investing. But the company-wise, I think there's a lot of good company now, right? So we are still looking into different sector to invest. Actually, we have done one recently, last week actually. We signed a deal in Dubai to sign up to acquire something very interesting, the decentralized media. That's very interesting.
Congratulations.
Yeah.
And Mario?
Well, I think like Ollie said, I think you don't want to, as we are taking care for the legacy of the family, we just don't want to be involved with some type of sector. So that said, sometimes it's not only about the money. You can find great opportunities in different sectors.
Yeah.
So,
Yeah. For us, we cannot invest in cannabis or psychedelic. Not because we don't want to. We in Kazakhstan, if you invest in that sector, you're jailed for 14 years. For religion.
You should avoid that.
Exactly.
should avoid that.
Well, it's been really fun hosting you guys, and I really appreciate everyone's coming in, and I hope everyone in the audience learned a little bit here today. And thank you.
Thank you.
Thank you.
And thank you.
We should
Thank you
say,
for the
go
wonderful
Macau.
sharing.
That's why we're here. We also
Exactly.
say we should come invest in Macau too,
Yeah.
right?
Yeah.
For sure.